Good morning, everybody. It's Joe Blodek here for another interest rate announcement today. We're going to get started, and the interest rate announcement will be here at 9:45 a.m. So what we're going to get started on today is just talking about some of the news that has been leading up to today and what the overall consensus is on what's happening in the economy, what the pressures are, and where we are all leaning into what's happening with interest rates. I'll give you my prediction. I'll give you what everyone else is saying. And I'll also share with you how the interest rate announcement, whatever it tends to be, will and how it will shape your lending products and how it will affect your mortgage. So if you have any questions about any of that, you can always pop it in the chat. I'm watching that real time. And if there's also any private questions, you can book an appointment with me in the link in the video description below. You can book an appointment with me to chat with me about your mortgage, and I'd be happy to do that. But as we get into this today, today's March the 12th. This is the second rate announcement in Canada in 2025. If you all remember, we had another interest rate announcement in January, and this interest rate announcement, we did see a rate cut of 25 basis points, which brought prime rate down to 5.2%. So prime rate is currently at 5.2%, and I'm curious this morning to see what you guys think is going to happen with the interest rate this morning when the Bank of Canada does release its findings and announcement in about 13 minutes. We are anticipating this very eagerly. I know there are a lot of clients of mine watching this video or will watch this video to find out more about how it's going to affect their mortgage. So what I'll get right into here is some of the stats I've pulled together for all of us. The first one is, let's talk about some of the pressures that affect interest rates in Canada. One of those pressures are unemployment rates. And unemployment has been going up in Canada over the last few years, but it's going up in very small amounts. It's been going up 0.1% or 0.2% a month. But in the last little while, specifically the last few months, it's actually remained pretty steady. Unemployment is down to 6.5% from a high of 6.6% in the last month. So what that indicates is that we did see a small decrease in unemployment, but it's not a big factor because unemployment being at 6.5% currently is still a pretty big unemployment rate. And I don't like to see anything that high. So with unemployment being at 6.5%, even though it has gone down from 6.6%, I think this will be a small pressure, not a big pressure, but a small pressure for the Bank of Canada to decrease interest rates. Because with unemployment this high, especially in today's market, it does signal a little bit of concern, especially for those who are looking for work right now. It's really important for anyone looking for work to be able to find a job and to be able to find fruitful employment and not just something to get by. So unemployment down to 6.5%, still a concern in my opinion, and will still be a small pressure that the Bank of Canada will consider in today's decision. The other big factor is tariffs have started. Donald Trump and the Republicans down in the United States, ever since they got elected, have been pressuring Canada and the Liberals here to implement tariffs because of a wide variety of reasons. We've all heard about it. I'm not going to go into all that political stuff today. But what I am going to get into is the tariffs and how they will impact your mortgage, because that's really what you're looking for. And if tariffs continue in Canada, I know there's a lot of talk of tariffs pausing possibly or being increased even more. If tariffs continue and continue being levied on Canadians. We actually just saw a threat of tariffs doubling this week, and Doug Ford is going down to the United States to meet with the leaders down there to come up with a better solution. If these tariffs stick around, it's really going to put a lot of pressure on the Canadian economy because we export so much. We have automobile manufacturing in Canada, we have steel manufacturing, and we have now steel tariffs that have been implemented, 25%. We are also seeing stores and businesses label products that have tariffs on them. So consumers can see, you know what, this is a product that has a tariff, and that is why it is more expensive. So as these products become more expensive, it's going to put a lot of pressure on the economy. And with that, the economy may start to take a little bit of a nosedive because people won't really have the money to spend on their normal goods and services that they usually do. So they'll hold back, they'll save more, they'll be more discretionary with their spending and use like a lot of judgment as to what they're going to spend their money on versus just freely spending it on the normal things. So with that in mind, the Canadian economy will have pressure and the government will need to do something. And one of the somethings that the Canadian government can do is decrease interest rates. So this is going to have a huge impact on the decision today. And it's going to be interesting to see how Tiff Macklem, our Minister of Finance, takes this into consideration when he does come up with what he's going to do with the Canadian interest rates. Because I think that the smart move here would be to decrease rates because of the tariffs. There's a lot of uncertainty, and we've seen this in the news the last couple of days, profound uncertainty in the Canadian economy. And when there is profound uncertainty, businesses aren't hiring, businesses aren't borrowing money, and businesses tend to not expand. They tend to do the status quo or maybe even contract a little bit. And we've seen this in Canada already. We've seen a few businesses start to close up. There's a business in Canada, Peavey Mart. We've seen them actually close their entire chain down in Canada. And I'm not sure if this is a direct result from tariffs, but this is a great store. And now they're closing down. And I think tariffs did play into that. There's also a lot of other businesses I won't get into, but this is going to have a profound impact. And as a musician, a lot of the things that I buy for my guitars and bass guitars and drum sets, they come from the United States too. And these may have tariffs now put on them as well. So as a musician, my costs are going to go up. So am I going to continue to buy more guitars or bass guitars or drum equipment? Probably not as much as before. But if rates come down, it allows businesses to continue to invest, to continue hiring because their costs have gone down in a different way. So let's see. We're going to have that announcement come out in just about 7 minutes. I want to cover off a few more things. The other thing is that the last rate announcement, we did see a cut of 25 basis points in Canada. That did get met with a lot of, excitement. And my clients love the fact that rates are coming down, but they're not convinced that they're down all the way. And a lot of clients of mine are actually waiting on the sidelines to see what's going to happen with today's announcement and potentially future announcements because we're seeing all this uncertainty unfold in this trade war between Canada and the US. Let's take a look at another factor that is going to really dictate what's happening with the interest rates today, and that is the Canadian bond yield. The Canadian bond yield tends to price in what's going to happen in the future. Last time we looked at the Canadian bond yield, it was around 2.9%. Today, it's at 2.639%. So that is a decrease, not a very strong decrease, but it aligns with a 25 basis point rate cut. Looking at 2.9 minus 0.25, you're looking at 2.65. So with the bond yield this morning showing 2.639, I can see that the market is pricing in a 25 basis point rate cut. If you're just joining me here today, I'm just going to throw in a little bit of self-promotion. It's 9:40 a.m. I'm a mortgage broker operating out of Ontario, Canada. I can help you with your mortgage virtually over Zoom or phone or whatever you want. You can book an appointment with me in the video, in the link in the video description below, and we can talk about your mortgage and how this interest rate announcement will affect your lending products. And we're going to have a Bank of Canada interest rate announcement in about 5 minutes. I'm interested to see what your thinking is as to what's going to happen with the interest rate today. Are the interest rates going to go up? Are they going to go down? Or are they going to stay the same? I will have that information for you in about 4 minutes' time. In the meantime, let's talk about inflation. Inflation in Canada has kind of been remaining steady ever since we've gone under 2%. As of this morning, we're seeing inflation at 1.9% in Canada. That's actually up from 1.8% last month. And in the US, we are seeing an inflation rate of 2.8%. That's also a very high inflation rate compared to Canada, but that's also down from 2.9% the previous month. So a little bit less on the inflation the last month, but in the US, it is still a lot higher than in Canada. So it's going to be interesting to see here because in Canada, 1.8% inflation means rates should come down a little bit. And a little bit usually means a 25 basis point cut. But in the US, 2.8% can indicate that rates should probably go up a little bit. So with Canadian economy following the US economy quite closely usually, it's going to be interesting to see how Tiff Macklem, our Minister of Finance, handles this disconnect between the US inflation rate and the Canadian inflation rate. All right, thanks for watching this far. We have the interest rate announcement coming live in 3 more minutes here from the Bank of Canada. I appreciate you watching. Always, you can book an appointment with me in the link in the video description below. Continuing on, how is this really going to affect fixed rates? Well, right now, fixed rates still remain lower than variable rates. As the bond yield has been coming down, lenders have been decreasing their fixed rates appropriately in step with the bond yield. So fixed rates have actually already come down ahead of the variable rates. And if the Bank of Canada does do a 25 basis point decrease today, we'll see variable rates then come down if closer to the fixed rates and catch up with the fixed rates as to where they are at. So if you are someone looking for a fixed rate mortgage and you're seeing that, oh, the rates came down today on the Bank of Canada interest rate announcement, I should be able to get a lower fixed rate. That's true, but it's already lower, and it's been lower for a week or two already as the market has priced in a 25 basis point rate cut. As of this morning, though, we're going to have an interest rate announcement in 2 more minutes, and we'll see if variable rates change. If you're someone like me who loves variable, you will see instant changes on your mortgage. And I'll get to that in just a moment. The market is forecasting a 25 basis point rate cut. As I mentioned, we're seeing that all over the news as well. We're seeing the news forecast a rate cut as well. And what are clients saying? My clients are unanimously, I can't even say that word right now. They are all saying that they are thinking that rates will come down, and they just don't know how much and when. I think it's going to be, well, I'll give you that prediction in just a second here, but they're all thinking rates are going to come down. And those who are coming into the market right now, they're tending to take a shorter term fixed rate mortgage versus a longer term fixed rate mortgage, something around the 3 or 4 year mark, or they're taking variable rates to take something that can move with the market, and then they'll be able to lock in when they feel comfortable to do that. All right, so we have an interest rate announcement in just 1 more minute here, everybody. I am waiting for this information to come out. It's going to be out in just a moment. Just some data here to go over before the rate comes out. The last time there was an increase was back on June 7th of 2023. All right, we have an announcement, everybody. The Bank of Canada has reduced interest rates by 25 basis points today. That's exciting news, and it also aligns with what everyone was saying, and that was actually my prediction, 25 basis points today, because I really think that the economy needed it. So that means that the Bank of Canada overnight rate is now at 2.75%. That does not mean the interest rates that you and I get. That means the interest rates that the banks get. The bank rate's at 3% and the deposit rate's at 2.7%. So 2 3/4 now, Bank of Canada has reduced their policy rate by 25 basis points. And that's going to reduce prime rate. Prime rate for all Canadians right now for their mortgage, if you have a variable rate mortgage with a Bank of Canada prime rate, is 5.2%. There are some banks out there that have a separate prime rate, like the TD prime rate with Toronto Dominion Bank, which is set on a different marker. But as of today, prime rate is now dropping from 5.2% down 25 basis points to 4.95%. This is going to be absolutely wonderful news for anyone that has a variable rate mortgage. And I'm going to get into how that's going to affect your lending products today, your mortgages, your lines of credit, and your credit cards and car loans in just a moment. But before I do that, just one more plug from me, and that is I'm a mortgage broker operating out of Ontario, Canada. I've been a mortgage broker for over 14 years, and you can always book an appointment with me for a free consultation in the link in the video description below. So last time there was a rate increase was June 7th of 2023. So we have not seen a rate increase in almost 2 years. The biggest increase was on July 22nd of a full 100 basis points. So it's almost been a full 3 years since that big increase. And the last time there was a decrease was just in January there, a 25 basis point decrease. So far in 2025, we've had a 25 basis point decrease in January and a 25 basis point decrease today, which brings prime rate now down to 4.95%. All right, just some other things I wanted to talk about. Websites were saying that we needed a decrease to battle tariff pressures. Websites were reporting profound uncertainty and conflicting economic signals. So with all that now, decreasing the rate by 25 basis points was a safe bet today by Tiff Macklem, because he's not dropping the rate considerably. He's dropping it enough to provide space in the future in case there is anyone that's thinking, you know what, the rates go down? Yes, they did. That's great. I'm going to get a mortgage now. But it's not going to be enough for everybody to jump into the market, because I bet there's still going to be a lot of my clients that are going to wait on the sidelines, because the next rate announcement meeting is not that far off. It's only on April the 16th, which is next month. And we had a nice break between January's meeting and March's meeting, over a month and a half, versus this next meeting, which is going to be just over a month away. So it's going to be interesting to see if a lot of my clients jump in or if a lot of my clients wait on the sidelines still. And I have a feeling it's going to be about 40% jump in now because they've been waiting too long, and 60% are going to continue to wait. And that's okay. A lot of people think rates are going to come down quite more significantly. And this is because of the tariff pressures and what's happening between the Canada-US trade war at the moment. We've been talking about these tariffs for the last 19 minutes here on Canadian Mortgage Weekly, Canada's weekly mortgage video news podcast. And we've been talking about how these tariff pressures are putting a lot of uncertainty into the market and driving up costs of goods that are coming in from the United States, which we get a lot of our goods from the United States. So prime rate, in case you're just tuning in, just got reduced by 25 basis points. That's a 0.25 decrease on prime rate. What does that mean now for your mortgage? So let me get into that. So if you have a variable rate mortgage today, you're going to see something happen. And it's going to depend on what type of variable rate mortgage you have. If you have a variable rate mortgage that is variable payment, then you're going to see an instant reduction in your payment. Your bank is going to send you a letter and it's going to indicate your new payment terms, which is pretty awesome. And with that, you're going to see a reduction in your mortgage payments. Depending on the size of your mortgage, you're going to see a payment reduction anywhere from $20, $30, $50. If your mortgage is very high, you could even see a higher than a $50 reduction in monthly payments, which is really going to give Canadians a little bit of breathing room as we get into these next few months here with these tariffs. And anyone that has a variable rate mortgage will see this relief immediately, pretty much on their next month's mortgage. Make sure you watch out for that letter first, though, before you take that information seriously, because some banks do take a little bit of time before they implement that next payment. So if your payments say coming out today or at the end of the week, you'll probably still have your regular payment come out. But if your payment's coming out a month from now or more, that payment will likely be a little bit less now because the variable rate has changed by 25 basis points. All right. If you have a variable rate mortgage that's a little bit different, that has a static payment, so your payment does not change, in that case, you will actually see your payment stay the same, your interest rate will get lower, and because your interest rate is going to get lower, you're going to see that your amortization will now shorten a little bit. And what that means is the length of time it takes to pay off your mortgage will now be shortened because the rate has gone down. That's not as much of a fantastic immediate relief as a lot of Canadians think, but that's a really good mortgage to have when rates are going up because it protects your cash flow. It's not that great of a mortgage to have when rates are coming down because you're not experiencing any immediate relief. But you are experiencing relief in the long term. Relief in the sense that your mortgage is actually going to be paid off quicker and faster because of the lower interest rate. So if you're just joining me here now, we're talking about how the rate cut today of 0.25% by the Bank of Canada is going to impact mortgages, especially variable rate mortgages. And what we were covering is that there's two variable rate mortgages where the payments change and mortgages where the length changes. So if your payment's going to change, you're going to get a letter from the bank saying your payment is going to say from $1,000 to $950. And that's going to happen on your next payment. The bank's going to send you that information and that notice via email or mail, whatever way you have set up with your banking institution. And there's also the variable rate mortgages where the length of the mortgage will change. That means that the payment will stay static and will not change, but the life of the mortgage will get a little bit shorter. Now, there are also some of you that have been asking me, how does this affect my line of credit? How does this affect my HELOC or my home equity line of credit? Great news, those rates are also coming down. And you're going to notice immediate savings on your minimum payment on your mortgage. And I'm going to calculate just how big of an immediate savings that's going to be. So if we take a look of someone that has a line of credit or home equity line of credit balance of $125,000 which is typically what I see these days. A lot of people are using their lines of credit for emergency uses, but some people are actually using their home equity lines of credit to actually supplement their lifestyle right now. So if we were looking at a line of credit before today's 0.25 rate decrease, we would see someone paying a monthly minimum interest payments of $594. Now, with that rate reduction, let's take a look at what happens to your interest payment. For that same $125,000, you're going to have your payment drop to $567. So great news there. That's a great reduction, actually. Fantastic. I love seeing that. So you're going to see immediate savings on your line of credit payments, and that's your minimum payment. So that means if you're continuing to make that same payment that you were today for your minimum payment going forward, say the $597, then your interest payment will go down next month. But if you continue making the same payment, you're actually going to start paying more principal. So that's fantastic news for all your line of credit holders. That's going to apply to home equity lines of credit, unsecured lines of credit, HELOCs, also some of the branded HELOCs or home equity lines of credit we have available through other financial institutions like the STEP product through Scotiabank. That's a fantastic mortgage where you can actually get a mortgage on your home with a mortgage and line of credit, and the line of credit increases as you pay down your mortgage. There's also the RBC Home Line, same concept. You also have the Smart Line through BMO. There's a bunch of different available options through different lending institutions for your home equity line of credit. They all work a little bit differently. There's also the Manulife One account. That's going to be another affected product. And if any one of you have any questions about that, you can always book an appointment with me for a free consultation using the link in the video description below. I am a mortgage broker with 14 years experience and can help you with discussing your options from here. Let's take a look at car loans. Some car loans are variable, and with this, you will see either your payment go down or your amortization go down. And for car loans, most of the time, I do see the payment is static, but it's your amortization that will change. And that just means that it will take less time now for you to pay off that Jeep Wagoneer or Chevy Tahoe or whatever you have financed. I see a lot of these Jeep Wranglers everywhere. I was driving behind one the other day, and it didn't have mud flaps on, so I kept having to use all my washer fluid. It's a little bit of an annoying thing, but hey, at least for you, you don't have to spend as much time paying it off now with that little bit of a lower interest rate. And if you're just joining me here, we did see that the Bank of Canada decreased interest rates today by 0.25%. If you have any questions, you can pop them in the chat. I do see there are a few people there. Thank you very much for saying hi. Appreciate that. All right. And what about credit cards? Most credit cards operate on a fixed rate, but there are select cards that do operate on a variable rate. Some are actually tied to your home equity line of credit, kind of like a secured line or a secured MasterCard or a secured Visa. And for those, we will have some payment changes as well. Your lender will notify you. And if you have any questions, you can always reach out to me as well. All right, if you're just joining me here today, I appreciate you watching. The rate announcement did come out about 15 minutes ago. We did see rates drop by 25 basis points. Tiff Macklem did make the decision to lower interest rates. which is fantastic news for anyone that's looking to buy a house right now, or in a variable rate mortgage right now, or in a home equity line of credit right now, because you're going to have interest rate savings, and that's going to be great. And if you have any questions, you can always reach out to me. I'm happy to discuss your mortgage with you. Let's go over a few last minute stats here before I end today's show on Canadian Mortgage Weekly. We do have the next rate announcement coming up in just over a month on April the 16th of 2025. That's going to be on a Wednesday, again at 9:45 a.m. I'll be here to help guide you through that rate announcement. I'm hoping that rates continue to drop this year and that we continue seeing these rates provide great relief for Canadians all across the board. We have needed it as rates have been high now for quite a few years. We did go over here that we had a big rate increase almost 3 years ago of 100 basis points on July 22nd, 2022. And now we're in a rate decrease cycle. So great news to see that. So the next meeting is April the 16th. I'm curious to know, are you someone that's going to wait on the sidelines still a little bit longer to get into the housing market because we might see rates decrease further next month? Or do you think that you'll jump in now or refinance now based on where rates are at? It's going to be interesting to see. Also, the average national house price, it continues to drop. So this might actually help the average national house price. We're currently looking at $670,064. That's a far cry from the average national house price we saw during the COVID days of over $800,000, but still pretty good considering it's much higher than it was 10 years ago. So anyone that did buy 10 years ago, you've done really well. Kudos to you. You're just not going to get COVID prices anytime soon. Prime rate, just before I go, has now decreased from 5.2%, down 25 basis points, 0.25%, to 4.95%. So anyone in a variable rate mortgage or a home equity line of credit, you're actually going to see your borrowing costs go down. And that's all fantastic news for the economy, because with these tariffs, this is going to increase the living costs for all of our goods and services. Well, not all of our goods and services, but some of the goods and services in Canada, and we get a lot of them from the United States. So as we continue to battle these tariff pressures, and if these tariff pressures continue, we may see further rate reductions in the future. I'm interested to know what your thoughts are. If you have any comments or questions, feel free to send them to me privately, as most people do. You don't really want to talk about your mortgage in the chat, but thanks for watching again, and I appreciate your support. Make sure you like and follow and share this episode to anyone that you think could benefit from learning about today's interest rate cut and how it's going to affect their mortgage. Appreciate you watching. My name is Joe Bladek, mortgage broker in Ontario for the last 14 years. Don't forget to like this video, and if you need anything, you can always book an appointment with me in the link in the video description below. Thanks for watching.